Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day. Good morning, everybody. Welcome to this Wednesday edition of Benzinga's Pre-Market Prep. Spencer Israel here with Joel Elconin and Dennis Dick. Well, we got our deal finally. It took a couple of days longer than expected, but we got a stimulus agreement overnight at just before 2 in the morning or so Eastern time. So we'll talk about what's in that deal and the market's early reaction to the stimulus package that now is going to the House, and then from there, presumably to the White House should it get through there. So that's the lead story of the day, is the reaction to the stimulus package and what that means going forward. We'll take some questions from our chat. We'll talk about Nike. They had earnings after the close yesterday, but the lead story is going to be the reaction to this stimulus deal. Joel, give us a quick recap of what happened here overnight.
Nice little range, Spencer. We got up to 24.98. Believe it or not, folks, that was one handle shy of Friday's high at 24.99. Reverse course dipped under 2400, getting to 23.86. Really no relevant level there to talk about. Rebounding back here into the 2400 handle. Mid-range on the session comes in at 23.42, and your close, 24.35. I'm sure a lot of people would like to see that close. Excuse me, the close was 24.38 there. I stand corrected. Crude down 43 cents at 23.58. You have gold in the red by 33.10 at 16.27.70. Silver going the opposite direction here. That's up 0.3 of a cent at 14.26. Bitcoin just hanging out here. 65.30 are the futures. They're down $195. Nice range overnight. Triple D. What are you seeing out there in the markets?
I mean, it's predictable that we would have popped, and that the vote, that they're passing it. Get the $2 trillion deal plus, potential another $4 trillion and wherever they're going to spend that. I mean, it was predictable that we were going to get a pop on this. The market wants to see, the government going to help the people. I think it's necessary. I think there's no other choice. But when you stop and think about it, you're like, man, there's no way ever getting out of this debt. I mean, I went and looked at that U.S. debt clock, and it's clocking, at 23 trillion, right now. Now you're going to eventually get this up, on this bridge loan to the economy, another 2 trillion immediately, and then now they're talking another 4 trillion after that as well to the companies that are going to need it. Obviously, we're going to have a lot of industries that need bailouts, airlines, Boeing, cruise lines potentially. I mean, I don't know where it stops.
Spencer?
So what's the out? I don't understand. How you ever? Is there any way to ever get out of that debt? Is it possible? You're going to be over 30 trillion in debt when this thing's said and done, and it might get worse. It depends on how long we're in lockdown. Is it possible to ever get out of that debt?
I mean, I wonder that, you brought up the U.S. debt clock. If
it's so scary. You can go
maybe not the best idea.
.org.
Not the best idea to bring that up. I've wondered that since I was first made aware of the U.S. debt clock. So
I mean, if you go back, and this is going, I don't know when it was 2 trillion in debt. Everybody was concerned about, how are we ever going to pay this off? Now we're talking eventually it's going to be 30 trillion probably when this is said and done, and maybe even more depending on how long we're in lockdown. I mean, I guess it's just a number at this point, and maybe it doesn't even matter. I mean, you're never getting out of it. So I guess, you just keep digging the hole deeper. How else do you do it? I mean, I'm not arguing that it shouldn't have been done. Yeah. What was the alternative? I don't even, for the government, they're probably thinking the same thing. I don't know what the alternative is. You can't just let people starve. You can't just let businesses all go out of business. Okay, you can't just let people I don't understand the out.
Just to back up here for 1 second. So what exactly is in this plan, in the stimulus deal overnight? People making up to 75 grand a year are going to receive checks of $1,200. Couples making twice that will receive twice that amount, so 150 grand. If that's what you make as a couple, you'll receive a check for $2,400 and an additional $500 per child. Payments decrease as you make more money. That's to be expected. The bill will also include roughly $100 billion in assistance for hospitals, $350 billion in assistance for small businesses, and $500 billion for corporations, such as airlines and any sort of tourism or travel.
And
business.
is that going to be enough? I mean, we've got Delta, I think it was Delta that was saying they're burning $50 million a day. So 10 days go by, they're going to be able to burn $500 million. In 20 days, they're going to burn $1 billion themselves. That's what the CEO, I believe it was Delta that was on CNBC, was saying. They're burning 50 million a day. I mean, you can reasonably see if we're in lockdown for 2 months, Delta themselves are going to burn, $2 or $3 billion of that, just that company. I mean, this is just scary. It's scary numbers when you start considering the ramifications of the problem that we are in. So am I coming and buying stocks and, ripping it up and buying everything here? I mean, I guess we've had this debt problem forever, and I guess they've been buying stocks, so maybe it's not a good argument. Maybe it doesn't matter, but it's just a scary thought of where we are. And the Canada's in the same boat. We're going to have to do a huge, billions of dollars worth of bailouts here probably eventually too. And the whole thing is just so scary. I mean, from an economic standpoint, from a health standpoint, there's so many reasons not to own stocks. There's just so many reasons.
But there is one reason to own stocks. There's one reason to own stocks.
Inflation.
Yeah, and that is
inflationary pressures of printing money.
Okay, fine. Two reasons. The other reason is that bear markets all have one thing in common. They end, right? So stocks are still the best way to build long-term wealth. That's the reason to own stocks for the long term. In the short term, yeah, I'm with you.
But let's talk about that. And, taking on your long-term investment hat, I mean, we've been inflating this bubble. Kramer was tweeting it too. We've been inflating it. The Fed's been inflating it for a long time. I mean, really, when you think about it, in the first 50 years, go back 100 years ago, the economy was growing because population was growing. We had population growth. So more people consume more goods. Economy grows naturally. I believe population growth was over 2% a year. Population growth has slowed substantially in the last 20 years. And, now it's cooking in the low ones. So you don't have nearly as much population growth. So how do you get people, how do you continue to grow the economy faster than the population? If you're shooting for 2%, growth, and your population's only growing at 1, you're not going to be able to, where do you make up the 1? And the way they've made it up for the last 30 years is by printing more money, by giving people more money to consume. So if you don't have more people consuming more goods, you've got to give them debt so that they consume more themselves. So each individual needs to consume more to keep the economy humming and humming and humming. I don't know if it all eventually comes to roost somewhere, if this all ends in a blaze of glory. I don't know how this ends. I just don't know how you get out of $30 trillion worth of debt. And, but I don't know what the alternative is. If people need the money, I get it. So it's just a very bad situation. So this is my argument, on why maybe I don't want to own that many stocks anymore. Maybe there's better places to put your money, but maybe there's not, because I guess cash is going negative rates. We're going to take it eventually. So maybe there is no other choices. So maybe the stock market just eventually does go back to all-time highs. I'm really kind of lost in this market from an investment standpoint. From a trading standpoint, I'm fade moves. I mean, last night's move was a fade, and it was, that's just what's been working. Buying the big dips and selling the big rips. It's been working continuously. I mean, the dip buying has been working for a decade. It has even worked in this market. You've had lots of dips, and then they've re-rallied, 1,000 points the next day. It's been up 1,000, down 2,000, up another 1,000. So if you're quick to get out, it hasn't been like catching that many day traders long. The buy the dip people have had lots of chances to flip out too. What are your thoughts on all this, Joel? I mean, you're sitting there quietly. You see your U.S., going to go probably 30 trillion in debt after this thing. Does it matter?
Doesn't matter.
Doesn't matter. Does the debt matter anymore? It's so big. The hole is so deep. They've dug it so deep that you cannot even see the light coming out of the hole anymore. So your only hope is to continue to dig it deeper. Is that, the only way out? There's no ladder coming. Nobody's dropping a ladder down this hole and bailing out the US out of 30 trillion worth of debt. So I guess you just keep digging it deeper. I guess there's no choice.
I think we're wasting time by talking about it. I don't
Why?
think because it's not going to do anything.
It doesn't matter.
It's not going to move. Yeah, it's not going to move the
The
needle.
debt doesn't matter anymore.
Nope.
You might be right.
Dennis, if you really are that scared, I would tell you to look at other areas of the world. U.S.
That's where I'm going.
The U.S. is out.
This is exactly where I'm going right now. So
Okay.
This is my argument where I'm leading to.
Okay.
China, is not in debt. China appears to, have the virus somewhat under control. China might be in the best shape out of everyone now. And Chinese markets have been hit pretty hard here too. Maybe there's a time eventually where we shouldn't have all our money in the US stocks. Maybe the US stocks have outperformed for years, and maybe this is going to be the time where you see emerging markets start to pick up the slack. This is my argument. What do you think about that?
I think just, get as much cash as you can and wait. And I don't, it's hard for me to even think about investing in the markets and return. I don't see, I don't see value anywhere. I mean, as far as China goes, I mean, they need us to buy their products and goods. So yeah, they're doing okay. I don't know.
Read a Peter Schiff book. He says they don't need us. That eventually they're going to figure it out that, hey, we have all the money, we have all the goods, we'll just cut the rest of the world off and we'll live happily on our own.
The problem with the Peter Schiff mindset is he may have good points that none of this makes sense, but the Fed and the economy can stay irrational longer than you can stay solvent. So it might not make sense, but that doesn't mean it's going to make sense ever, right? Like we could just keep digging the hole forever. So
where they're going to, there's no other choice. There's no way out of the hole.
Right.
I mean, I guess if you take interest rates negative, maybe they start paying, maybe China has to start paying us for holding all their money. Maybe that's where they're going here. Where, it's not about servicing when the interest rates, if they could take them negative, then, you've got to get paid. Because the reason I'm saying that is because China owns a big chunk of the U.S. debt. It's obviously a majority still held by U.S. citizens, but I think it's over 20%. They hold of the U.S. debt, which is significant. If somebody knows that number, I don't have it in front of me, but it is significant. I mean, all of this is just, food for thought here. We're trying to figure out, do I want, I've got my investing hat on here. I put it on for, it's a D, for the Tigers here, but it's an investing hat on right now. And I'm trying to figure out, do I want to buy stocks or not? I'm 80% cash. I was 70% when this started, but my stocks went down so dang much, and I sold a few of the rallies that I'm like sitting with 80% cash now. Do I just hold all that cash when I know interest rates are eventually going negative and it's not going to make me any money? If they're going to keep inflating the bubble, maybe we are just going to go back to all-time highs. Maybe we just buy stocks. Don't worry about any of this stuff because it doesn't matter. Debt doesn't matter. We've been going straight up for 10 years and building the debt. So maybe it doesn't matter at all. Maybe I just close my eyes, throw all my money back into the stocks, and the Fed's going to bail me out anyways, because I've seen it on CNBC 3 times this morning. You can't fight the Fed. The Fed always wins. They don't run out of bullets. It's probably right.
Okay. All right. Let's talk about some stocks then.
Joel's down, and I just want to talk the macro picture because the only thing that matters to stocks right now, you can go and talk an individual stock all you want. It doesn't matter right now. All stocks are moving together to a certain extent. Unless it's a coronavirus stock, you can go and talk, CTSO comes out with a press release this morning and they've got some drug, approved over or whatever from the company, and the stock goes up 100%. It's up 50 now. It's already leaking. I mean, unless you're a coronavirus stock, all stocks are just moving together. The utilities, you've got, the financials, you've got the industrials, you've got the tech stocks. They all just move together. Cats and dogs living together in harmony here. Everything just moves together. So a stock is a stock is a stock until we get out of this mess. Once we get out of this mess, we'll start seeing separation again. I've also said, stocks with debt are going to get hit harder. So I still stay away from them. But should I be looking at these tech stocks and buying this dip? What are your guys' thoughts? I'm 80% cash. What's your guys' thoughts?
My thought has always been that investing in the stock market is still the best way to build long-term wealth. And what's the saying from Rothschild? The time to buy is when there's blood in the streets, even if the blood is your own, right?
Yeah, I hear Karen Finerman say that on CNBC
Even
all the
if
time, too.
even if the blood is your own,
Some of
right?
it's my blood. I have a little bit
Yeah,
of blood out there.
yeah, sure.
Sucks.
So my long term. I mean, what other choice do I have if I want to one day retire? What choice do I have? Than just dollar cost average my way into this thing, which is what I'm doing.
So let's talk about some stocks then. I've
Okay.
got on my shopping list, the one stock at the top of it is Qualcomm. It's, kind of, it's off the lows, but, you're still significantly off from where it was. It's got a 3.84% dividend. It's going to participate in 5G if we ever get out of this mess. Like I said, I haven't bought any stocks yet because I'm still not a full believer that the bottom is in. I don't know. It's a good, you can look at 221 SPY and say we're up, 200 points on the S&P from where we were 2 days ago or yesterday morning or yesterday in the pre-market. So obviously, it's a nice rally. And, we said on the show yesterday, it felt different. It felt like they were buying some stocks. It did feel different. So now you get a little pullback here this morning. And some stocks pulling back, not significantly, but pulling back. Let's say we get down to 235. Do we put some money to work? I honestly don't know the answer to that question.
No, Dennis, you don't. You
Why?
don't.
Joe,
You don't.
yeah,
You
give me
you
your.
don't, because you'll regret it.
Why you think the market's going lower?
Yes.
Why do you think that? Because the Fed's fighting you. You're fighting the Fed.
Well,
Because it's never that easy, Dennis. It's never that easy. Like we made a new low on, what is it, on Monday, right? Is that the low of the move?
Yeah,
Monday
like 2 days ago.
Right, Monday morning. Okay, it's never that easy. It's not. It takes time for markets to form a base and consolidate and rebound. If you're going to buy something now, buy it, but don't expect to make money in the short term. You will lose money in the short term, but that can be okay. If you want to buy Qualcomm, just do it, knowing that you won't make money for the next few months.
Maybe you will. I mean, the best money was made in the financial crisis right during the peak of it, like right during the bulk of it. The Mark
Right.
Haynes bottom at 666.
Anybody who bought the market in October, September, December lost money for a while, but eventually they made it back.
They did.
But the market was still going down. So don't act like you have to find this bottom. Forget the bottom. Forget that. If you want to buy it, just buy it, accept your short-term losses, which will happen, and then go from there.
Okay, so let's pick some stocks that we think aren't going to zero, because I believe you are going to see some major companies' stocks go to zero. I do believe that. And it happened during the financial crisis as well. I think we're not out of the woods here. This talk of Trump, getting everything open by Easter and we're all going to be happy in 2 weeks is nonsense. There's no way out of it this in 2 weeks. It might be a way out in 2 months, but it could even take longer than that. So let's find those companies that we think are, going to survive no matter what. I believe Apple is going to survive no matter what. It's catching an upgrade this morning from Deutsche Bank. I own Apple in my long-term portfolio. I sold no Apple because I knew that they have a lot of cash. They have some debt, but they have a lot of cash. They can survive a long time. And let's be honest, iPhones aren't going away. And there's a lot of smart people that work at Apple that are going to have other products coming up the pipeline that are going to help. So on pullbacks here, Apple's not getting a pullback because Deutsche Bank has upgraded it here this morning. But what are your thoughts, on Apple? Is this a stock you'd buy? I would buy Apple if it got down a little further.
You know what I wonder? We've wondered for years what it would take for Apple to make like a meaningful acquisition, and they've sat on that cash for years. Maybe now is the time. Maybe now they make a big acquisition or two with prices so cheap.
Who and why?
I don't know who and I don't know why, but we've been wondering.
If they haven't up to this point, I don't think this is the kind of environment where you would want to do something like that.
I think it's exactly that kind of environment. I mean, Costco just bought, I think it was a logistics company for a steep discount. This is exactly the time you want to buy a company on the cheap. So maybe this is not that would impact Apple stock in any way in the near term, but maybe that now is the time where you do maybe make an acquisition. I'm just speaking. I don't know. I don't have any information. I'm just throwing an idea out there. But I'm with Dennis on Apple in the long term. I'm just wondering, if now is the time when they make an acquisition or two. Who knows? And then I also like Nike here. Nike's providing a good blueprint here.
Yeah, let's talk about Nike. They had
Good.
earnings, so
Right.
let's just see what. Let's talk about Nike.
So the stock is up this morning, and the earnings were good. I didn't pay so much attention to the numbers as I did to what they said about their stores in China and their reopening here, and what the deal is going forward. So Nike did say, as I pull it up in the Pro, they did say last night that what is it, 80%? Let me find it here. Of their stores were reopened. I believe that's what I read. Although now I can't seem to find it, so go figure. Let me look here. No, I don't even see it. So the majority of their stores, I think, are open or opening in China in the next few weeks, and they provided a nice path forward here. I mean, the numbers were good. They beat on the EPS, they beat on the sales, but they talked a lot about what's happening for them overseas, and the market likes it.
Well, let's get into it. It started climbing last night, and you made a pre-market high. Came in at 81 and a quarter. So we backed a little bit off $2 on that. I would say, if you don't get over and roll over before, you don't get to that pre-market high and keep going. I think if you break below 78 and a half, I wouldn't want to be long this stock. I think there's a lot of room underneath here. And I don't even know if it's going to open up above 78 and a half. You got a pair of highs there at 78.20 and 78.49. Two tops back from the 12th and 13th. So I think this stock is overvalued by $1.50 here in pre-market trading.
I mean, just looking at, every time a company has reported good earnings and we've got a 10 or 12% rally, it's been a selling opportunity for the last month. So I'm not going to argue with Joel. I'm not chasing stocks up 10%. Same reason I wasn't buying stocks, this morning or last night when we're up, 12% in a matter of, hours. And, there was a lot of stocks that were up 30% yesterday. Not a joke. I mean, your major banks were up 15 to 20% each. This is, if you're coming and buying stocks when they're up 20%, you're doing it backwards, in my opinion. I've said that a lot of times, correctly here on the show a lot of times. Could Nike go to 85? Sure, could. But I think the opportunity is more selling those stocks into the rips as opposed to buying stocks on rips. I've never made a lot of money buying stocks on rips. So I'm with you, Joel. I'd be a seller if I had it. Could go higher. I'm not shorting it, but I think, it's $60 3 days ago. It's 80. You just got half your losses back. There's probably a few people that are saying, thank you very much. I'll take some money off the table.
Okay. Ali S has been asking about Baidu for like 2 days straight, and we haven't done it yet. So we'll pull up a chart of Baidu. I mean, this thing started going down long ahead of the coronavirus. This thing started going down way ahead of
It's been a horrible performance.
Yeah.
For the last 2 years, Baidu has been going straight down. They started picking it up there towards the end of last year. It started showing some hope, got under $100, and then had the run to 150. Now you're back under $100 again. I've wanted Baidu. It was kind of on my shopping list too at one time. I don't own any. Be interesting on a pullback. I mean, I've just gave an argument about buying Chinese companies here. Maybe get this down at 90, maybe a nibble in. I'd be on board with, nibbling in some Baidu around $90. Not 96, because we had a big rally yesterday, but it fills that gap. Maybe.
Yeah,
I'll add Baidu to my shopping list.
Yeah, I
gotta check the debt though. I'm scared of debt.
Yeah, $82.
Baidu's on the list.
Yeah, I mean, I don't know what's going to kickstart it here. It's had some rallies off the low, and then it's come back down. I mean, if you feel like you have to own it and you're willing to risk, $15-20 from where it's trading here, the low of the move's 82. But what's the catalyst, to get this?
The catalyst is that China, it looks like they're closer to the end than we are.
That's what I was arguing off the beginning of the show, is maybe we should buy Chinese stocks as opposed to just jumping ahead into the U.S. stocks.
So if that's what you're going to do, man, one ETF that I've been looking at, and again, I have not pulled the trigger, is KWeb, the crane shares.
It's got all of those in there.
It's got all the Chinese ETF, Chinese internet names. It's got Baidu, Baba, Sina, Weibo, There's I think 20 or so.
Low 40s. K-Web going on the list, Spencer. It's a good idea in the low 40s.
Yeah, it's on my list, and again,
this is a shopping list that I have. We haven't bought any of this stuff yet, but we're looking. It's important to make a list. I'm getting the list going. K-Web just added because that's Spencer Israel pick right there. And sometimes Spencer Israel picks some good ones.
Chinese internet, 5G, cybersecurity, and then the marijuana ETF are all on my list right now. But
the marijuana ETF is still off my list.
I don't blame you.
That's a way to burn money up and smoke, in my opinion. But
yeah, I don't blame you for that one.
I mean, some of these things, stop going down. That's the good news. And maybe at a certain point, some of them are cheap enough to warrant an investment. But I think there's better places for your money. I still like tech.
Yeah, and I should say, I should say there are other Chinese internet ETFs out there. K-Web is the one I've looked at, but there's CQQQ. I haven't looked at the expense ratios for a while. I don't know which one's cheapest, but I will look at that if I was going to look at an ETF. So just compare the holdings, compare the expense ratio, and go from there. But there are multiple Chinese internet ETFs out there besides K-Web.
I like tech, anything tech, and Chinese tech sounds pretty good to me here too on pullback. So if you're looking, you want to nibble in, and maybe I'm going to eventually start putting some of my cash to work here. Obviously, I raised a lot of cash. We're up at 330, so I'm looking at a 241. You're talking about 900 S&P points that I basically scalped on my investment account on a lot of this stuff. So from the stuff that I sold up when we were concerned about the markets in January. I mean, we get back to 230, maybe I do nibble on some. I'm trying to, stay, with the positive thing here. My gut instincts tell me that we're going to end up taking out those lows that we made a couple days ago. That's what my gut tells me. But logic is saying I might be wrong and I should put some cash to work at some point in time. So when that time might be close to now, at least starting to nibble into some stocks. But when you really analyze it all, you're like, wow, there's a lot of bad news flow still coming. Like New York's still a mess. The death rates, we're probably going to go on full shutdown in a lot of different states as well. There's going to be a lot of companies that need bailouts. There's a lot of bad news coming. So I don't think it's like oh my gosh, we're up the 2,000 points yesterday. I better chase this. I don't think you need to chase it.
Well, there are two hurdles to overcome, and we just jumped one of them, right? We just jumped the economic hurdle. Right,
I feel like we band-aided.
No.
I feel like we band-aided that.
We jumped the economic hurdle.
All right, a band-aid.
Oh, no.
A band-aid. Fine, a band-aid. Fine.
A band-aid. I mean, maybe you took a little piece of Kleenex and just. I mean, you didn't even stop.
You got a gash, so you got a gash. Your whole, guts wide open, and now we just threw a band-aid over it, but we're waiting for surgery still.
Look, the market liked it. Okay, the market's been rallying.
Oh, for sure they liked it.
Okay, so we got something. That's
drug addict likes heroin too.
Oh my goodness.
I mean, that's really, the market's been going off Fed money for a long time. So keep the party going. That's what, the market says. Of course the market likes it. So, I mean, this is the only argument to buy stocks is that the Fed is going to continue to fire bullets, and they're going to find more bullets, and they're going to continue to fire until the markets all stabilize and eventually come back.
All right, 7 minutes or so, we're going to get the perspective from across the pond. Michael Hewson, the chief market strategist at CMC Markets. He'll give us a view on what's happening on the ground over in the UK and what the sentiment is like over there. That'll be in about 5 minutes or so from now. I have been trying to write down stocks from the chat, and I have a list from the last couple of days.
Let's do it.
That we haven't gotten to. This list is a couple of days old, but there are a few names on it that we haven't discussed.
Sure.
Somebody a couple of days ago brought up, this is one I thought about, Match, MTCH. You would think everyone's home right now, right? Maybe they're doing some online dating. I don't know.
Well, there's only one problem
meet the person afterwards.
Yeah.
No, you don't have to do it.
Right, that's
you don't have to do anything. You don't have to do anything.
How's this stock? This stock, I haven't pulled it up. Everything's been getting killed, but this thing's really got to be getting killed.
Well, it's come back yesterday. Everything came back a lot yesterday.
Yeah.
I mean, you didn't hear.
I would touch this one.
It was a record for the market yesterday. I heard him say it on the press conference.
Yeah, best day ever.
Record for the market.
Hoo-ha. Yeah, this one's been pounded. Trading up. I would just want to. It should try and stay green today, but I mean, do you think people are thinking about dating and I mean, people aren't you know,
Well, think about it
staying
like
away from
this.
their family because they're worried about getting virus, right?
Think
So
about it
I
like
don't see
this.
why online dating.
Well, these companies make money via subscriptions and also via ads, right? And everyone is home, stuck at home, trying to escape the fact that they're stuck at home. So they're in the same way that a lot of media, and both online and broadcast and even print is seeing a huge jump in viewership and readership. I wouldn't and activity on social media too, Facebook and Twitter. The question is, can they monetize that? Facebook has said yesterday that they're actually not monetizing a lot of their COVID-19 type resources, and also there is a uh, expectation out there that there will be a secular downturn in the advertising market as we head into a recession. So even though you're seeing usage at Facebook, I'm sure is at record level. Same with Twitter, maybe even Match. I don't know. They haven't said anything, but they have to monetize that somehow for there to be a reaction in the stock, and a positive reaction at least. And it looks like we're in for a secular downtrend in terms of advertising spend. So that could negatively impact every company. Facebook makes 98% of its revenue from ads. So I would watch Facebook closely, and I'd watch Match.
Yeah,
And
yeah,
watch Twitter.
we did talk about that. I did do my Peloton 3 days in a row, but I didn't do it yesterday. Dennis, have you been getting
Where's
on your
that
treadmill?
stock? I went on the treadmill yesterday as well.
Good.
Trying to do something. Stay alive.
You got under $20.
It's bounced back too. I still
yeah,
think Peloton is a coronavirus play. So you've seen how Netflix has held up so well, and I think eventually they talk about Peloton as a coronavirus play. I mean, the valuation doesn't make any sense. I'm still going to argue it's it's a stationary bike with an iPad attached to it. So long term, not going in my retirement account, but there could be trades here. I mean, if you think eventually people start seeing it as a coronavirus play, you could buy it here. You can get it at 24.20 this morning is where 20 or low 24s, let's say. I'd stop out below that 21.78 though. I wouldn't want to get stuck with this thing.
yeah.
So, on a pullback here, I'd be interested for a trade on this. Just a trade with stopping out again at that 21.78. It's not going to my long-term retirement account though.
We're getting a request here for Facebook, and Facebook.
They had news.
What's
Did
the
you give that
news?
news, Spencer? The ad revenue slow.
Yes, yes, I mentioned that. I didn't.
Yeah, I think you just mentioned it.
I didn't read the actual headline, but they did say that they expect to see a slowdown in ad revenue.
Yeah, the ad revenue, which is expected. I mean, come on, everybody, ad revenue is going down everywhere right now. Who the hell needs to advertise? Nobody's going out. So ad revenue is like ground zero here too. So you're going to see that happen for a bit. Eventually, it's going to come back, though. Obviously, eventually businesses are going to come back. And if the Fed has anything to do with it sooner than later, especially if Trump's Easter, timeline tries to hold, which isn't going to happen. You know what? I own Facebook. I sold the majority of it. When it got a little bit silly, I kept a little piece. I want to rebuy some Facebook. I had originally bought it down in the 130s after it had that, ugly 2019, I think it was. It was one of those stocks. Yeah, 2019. I bought in the 130s and 140s and sold up in the 180s. I'm interested to re-get this stock. So back in the low 140s here, they got some cash too. This is one I put on my shopping list. It's going on there right now. In the low one, not at 157. I think you're going to get a shot in the 140s.
I mean, your first level of support comes in at yesterday's low, 152.57. If you're looking to buy this on a little bit more of a pullback, you did have a rally from 137.10 to 161.91. Half back is just under 150 at 149.21. Really no daily low there to support it, but that would be a target for me on the downside. Not sure I'd be stepping in and buying it at 149, 150.
All right, let me bring on our guest today, Michael Hewson. He is the Chief Market Strategist at CMC Markets over in the UK. As I try to unmute him here, Michael, good morning.
Good morning. Can you hear me all right?
Yes, we can. How's it going for you, I guess, this afternoon?
Well, it's been an interesting morning, to say the least. We started the day here in Europe around about 3 or 4% higher on the FTSE 100. The DAX tested 10,000 And since then, we've pretty much given up most of those gains and are heading back down to either negative territory or flat. So I think it's very much a case of buy the rumor, sell the fact with respect to the stimulus package that was announced this morning.
So, Michael, what is the sentiment like over there?
It's really difficult. I mean, as you can see, I'm holed up in my home office down on the south coast of England. Been here pretty much for a week now, going stir crazy.
You and all of us. You and all of us.
Indeed. For some reason, I can't seem to start the video for whatever
That's all right.
reason.
That's all right.
I don't know why. I should have checked it beforehand, I guess. Yeah, I mean, I went out for a walk this morning to the grocery store, as you call it, and they're basically maximum of 25 people in the store,
Wow.
one in, one out. In terms of sentiment, uncertain. I think uncertain is probably underscoring or understating it a little bit. We've seen some really big gains over the course of the past couple of days, but I can't bring myself to buy into these gains. I still think there's an awful lot of bad news still not priced in.
So what would it take for you to not be as afraid?
It would take for the coronavirus case count to start leveling off, and not really seeing any evidence of that. And you guys, sort of 2 or 3 weeks behind us here in the UK, we're still on an upward path. Spain's just had its worst day ever and is on course to pass Italy in terms of deaths. So for me, I think we're a long way short of even getting any sort of idea as to the economic damage. I think it's pretty much accepted we can ride off Q2. I note that James Bullard has said that Q3 could be a transition quarter. Well, I think he's being slightly optimistic, if I'm honest with you, because I'm not really certain that Q3 will be as a transition quarter as we think it might be.
So that brings up an interesting point that we haven't really gotten any economic data yet. It's expected to be bad, but we haven't seen a lot in terms of the economic effects from the data side yet. We'll get initial jobless claims in the U.S. tomorrow. We'll get the unemployment report next Friday, actually, in the U.S. So the expectations are obviously that this is going to be bad, but
it's going to be horrible. It's
Right.
going to be absolutely ghastly. I mean, I'll give you an example. Obviously, there was those Canadian numbers out yesterday. I don't know whether you saw them. 500,000 jump in weekly claims there. But in Norway, right? Norway, I wrote about this in my morning note. Their unemployment rate was 2.3% around about 2 weeks ago. It's now 10.4.
Whoa.
That's the highest since the end of the Second World War. I mean,
Okay,
that is just that's a 350% jump in the unemployment rate in the space of a couple of weeks.
So my question then was, how much do you think the market has already priced in a lot of this bad news? Because we obviously expect it.
I don't see how you can price it in, because how many pandemics have we had to look through in terms of the economic impact of? The last one was over 100 years ago, just after the First World War. So we're really in uncharted territory here. I mean, the fact that we posted the biggest one-day gain in the Dow since 1933 yesterday, I think tells you something. People haven't got a clue. They're looking at stocks thinking they may well be cheap, and they may well be. But the big question is, how long before we come out of this quarantine, this lockdown? At the moment, here in the UK, it's 3 weeks. I have a feeling that we'll be stuck down in lockdown for a lot longer than that. And I think President Trump, is living in cloud cuckoo land if he somehow thinks that the US worker will be going back to work in April.
Wait, what is the situation like? Are you guys on full stay-at-home orders, full lockdown, all non-essential businesses closed?
Yeah, pretty much. Yeah.
Okay.
The only businesses that are allowed to stay open are grocery stores and pharmacies, and any other essential shops and services. That's pretty much it. You're not allowed to go. You're allowed to go out once or twice a day. So once a day to go for groceries, and and second time to do some exercise. But you have to basically keep 2 meters apart from anyone you come across, which is easier said than done in the city. It's a lot easier. It's a lot easier down here on the south coast of England. In my lunch hour, I walk down to the beach.
Michael, what is your reaction to how the central banks have handled all this?
I think they've handled it pretty well, considering. I think they've done everything that they've been asked to. But ultimately, it's not really down to the central banks now. It's really down to the politicians. And we've got somewhere, finally, with the Democrats and the Republicans, why it's taken so long and why they had to, I think, put every single component part in place before they passed this bill. I would have suggested that the most important part was to get checks out to US workers who really, really need them. You have one bill for that, and then you argue about the rest later. Because for me, Main Street is much more important than Wall Street right now.
Right.
I don't know whether you have a view on that, but that's certainly my view on it.
I think we agree with you on that one. Yeah.
Because there's a lot of pain out there. And the financial crisis is still very, very fresh in the mind. And there's this perception that the banks got bailed out 12 years ago, but no one bailed out the man in the street. And it's about time that, politicians started to look at the man in the street. And I think there's a huge amount of political tone deafness when it comes to the ordinary man in the street. Most of the politicians on Capitol Hill haven't got a clue about how the ordinary man in the street lives. They really don't. They're in their own little bubble.
I agree with what you just said. I think that applies to pretty much everyone in our government. And yeah, you're right. I mean, this is going to be bad for a lot of people. It's bad for the market, but it'll be worse for a lot of everyday people. Like I said, we're going to get initial jobless claims tomorrow at 8:30 a.m. Eastern time. It was 280,000, I believe, last week. It could be what, like in the millions this week? It could be.
What's the market? My market is 1.5, 2 million.
Oh man.
I mean, you can drive a truck through that. But if you look at what the Canadian numbers were, and given the fact the US economy is probably 10 times bigger, it's actually quite scary. I mean, in Ohio alone, the jobless claims a week ago jumped massively. You extrapolate that over 50 states, and that's quite a big number.
All right, can you say something to make us feel a little bit better here? I mean, I'm getting a little bit scared. Give us one like bullish scenario. We've talked about vaccine treatment, but like what's the, like, give us something to make us feel a little bit better here.
Well, for me, this is absolutely navigable in terms of working your way through it. Our government here in the UK, they passed a stimulus plan last week, and they pledged to pay 80% of salaries for the next 3 months to stop workers being furloughed or laid off. Now, that is a start. And ultimately, if governments can do that over the course of the next 3 months to get their respective economies over the hump and not align themselves with political dogma, then I think this is a crisis that ultimately we'll see benefits and beneficiaries from. It's certainly going to change the way we work. I mean, it's already changing the way we work. Look at it right now. I mean, my lockdown portfolio consists of Domino's Pizza, Zoom, and Netflix.
Hey, those are three good companies.
3 good companies. There you go. I'm just looking for a wine company, or maybe Constellation Brands. Corona beer, you can pick that up quite cheap, I understand.
Yeah, that's what I've been seeing on the internet. 3 good brands here, and that's the silver lining is out of the financial crisis came a lot of really good, innovative companies.
Yeah,
basically the fintech industry as we know it was born out of 08, 09. So,
and I think from every crisis, there are always winners and there are always losers. And I think for the last 10 years, there's been an awful lot of zombie companies being kept afloat by this central bank money. And I think it's about time that these companies were allowed to fail.
Yeah.
And then we can actually concentrate on putting capital to work on businesses that actually, have a purpose.
Yep, I'm with you on that. Michael Hewson is the Chief Market Strategist at CMC Markets. Mike, thanks so much for joining us today, and be safe out there.
Thank you very much. You too, guys. Take care.
All right. 8:45 here, about 15 minutes left in the show. Guys, either of you have thoughts on anything
I just want to
Michael's?
say, for your day traders out there, there's a lot of buy imbalances here. So we're trading down 12 handles, on the S&P with fair value. If these buy imbalances hold, we're going to open green. So I've actually been buying stocks because it looks like, from a day trading perspective, because it looks like there's a lot, whether these change or not. I will tell you though, they're a lot more stable lately. There hasn't been a lot of like games where you're seeing, oh, it's the sell amounts, I'll buy amounts, sell amounts. They've been a lot more stable, and they've been a really good indicator for where the market might potentially open. So right now, if we were to open right now, we would open significantly higher. We're not opening at 8:45, so things can change. Maybe some big institutions come in to start selling. But I will tell you, there are pockets of serious strength here this morning. General Electric is trading up almost 5% here in the pre-market, 1.2 million to buy. Bank America will not go down, and it's trading up 1.28%. There's also 464,000 shares to buy. Coca-Cola is ripping here this morning. And some of these might have ratings. I haven't looked that closely. So, maybe the ratings and Coca-Cola, I believe, did catch an upgrade here today. But it's up another 4.5%. And it also has 487,000 to buy. They're big buying balances. Ford, General Motors are both very strong this morning. Ford's got 2.4 million to buy here this morning. It's trading up 10%. Some of these companies are trading up because of the potential of bailout package here. So some of the stocks that were in ground zeros, like your casinos, like your cruise lines, like your airlines, are all up substantially here this morning. I mean, we haven't talked about it, but Delta's up 15% here this morning. American Airlines is up 16% here this morning. LUV is up 10%. These were the stocks that led us yesterday, and they are leading us here again, which makes me think that this market is going to go green. That's what I think from a day trading perspective. So I've taken off my investing hat. I put on a day trading hat here right now. Right now, I think this market's going back green. I think it's opening green.
Yeah, I think that I'm not going to be making any wager on that, but those could flip too, right, Dennis?
They can. Oh yeah, for sure they can. But I'll tell you, in my experience in these markets in the last couple of weeks, the imbalances have given me a good edge. Like just following that information, they've been pretty stable. You're not seeing a lot of like, big institutions. Oh, I'm going to sell it all. Like Boeing, for instance, has 634,000 to buy right now. Huge amount of buying balance. It's trading up $20. The S&Ps are down. There is some stocks that are trading in the red. There is some stocks trading in the red here this morning, but there's a lot of stocks in the green. So I'm actually very surprised.
I don't know. I mean, Dennis, I went out and before we got lock limit up in the morning, when you said that, I went out and I made some purchases and they turned out to be good, but I'm not doing that today.
I'm telling, from a day trading perspective, I'm buying stocks right now because I think some of these stocks can open higher. So that's just for the day trader hat. I'm using the information that's available to anybody who subscribes to. You can get it through IB, you can get it through a lot. Right now, the imbalances look strong. If they change, this market could change in a hurry. But right now, the stocks are trading higher. Like ExxonMobil's up, it's up 3% here this morning. Yeah. Oil's down. So you're
been
seeing
good with
strength
that.
in the stocks.
Over the years,
it's made me a lot of money.
That's
just
been
following
a very
the imbalances, the opening ones, the closing ones suck.
Indicator.
Yeah.
Very good indicator.
So right now, and I've given a lot of bearish, investing hat off, day trading hat on. I'm a buyer of stocks here for day trades right now.
Okay. All right.
I mean, yesterday it worked too. I tweeted out, that.
Yeah. Well, yesterday was
2 days ago.
Yeah.
When we had all the sell imbalances, the market was up 30 handles. I was like, we're going to open down probably. And you know what? We did. I mean, this is the exact opposite here this morning. I'm seeing a lot of huge buy.
Oh, it was a great call.
I mean, it's go across the board. They're almost all buys. Chevron, 116,000 to buy. ExxonMobil, 388,000 to buy. AT&T, 372,000 to buy. The stocks are trading higher too, which makes me think that they're, real because, there's traders that are betting that they're real. So it's not like sometimes you'll see a big buy imbalance and stocks trading lower. You're like, yeah, it's probably going to flip. Traders probably know something. Traders are saying that these seem to be real. So it's actually very surprising how many buy imbalances are out there this morning with the. Do you
think that's because there are I don't know, more people maybe sitting out? So
I think so. Yeah, I think so. I don't think that there's a big institution that comes in and says, okay, I'll sell 500,000. A lot of big money making those big calls here right now. Institutions are still making trades, and they have to, but they're not as apt to just come in here and fade a big one,
Right.
because there's so much happening. I mean, even if you're thinking you're going to be a day trader, or you're a high frequency trading firm, and you go and you fade something that's trading up 5%. Well, yesterday some of those stocks that opened up 5% went up 15%. So it's scary to just come here and fade them too. So that's why I'm kind of going with them. So as of right now, I'm just saying there's a lot of buy imbalances here. It's a nice opportunity for the day traders if these buy imbalances hold, because we are still trading in the red. We'll see if I'm right. We got 40 minutes to find out if I'm going to be right.
Yep, and
I make my living making calls like this, though. So.
And then just you said it quickly, but why do the closing imbalances not matter as much?
There's more institutional action on the close, and they're mattering a little bit right now, but in normal markets, there's so much institutional action on the close, like 500,000 is nothing for any stock. So, like I had one friend that worked at BlackRock, and he's like, they do everything on the close. Everything's MOC or LOC, limit on close, market on close, because they know the other institutions will be there. So the price impact's less. So there's so many big traders. If you have 500,000 to buy on the close, there's probably another trader that says, I'll sell them. There's people who are looking to get out. There's not that many traders looking to move 500,000 shares in and 500,000 shares out right now, because it's too wild. The markets are too wild. You do have the odd trader that's going to be big, but traders are typically trading a little smaller. So when you see these bigger numbers right now, they're more prone to be real and probably not paired off as easily. And that's why I think GE's up. GE's up substantially. It's up almost 5%.
We've rallied. I mean, we definitely rallied since you said that. We rallied.
Well, we've been chopping around. So I'm just saying I'm buying stocks for day trades right now. Probably sell them at the open. So buy them in the pre-market and sell them at the open. And in some cases, these might work. Now, again, you got to realize how it works. I'm not going to go pay up 5% for GE saying it's going to open up 6%. I'm just saying other stocks might get dragged up here. The index itself, the play is probably SPY. The index itself, I believe, is going to open higher. So you can just flat out buy SPY down $1, and if it opens higher, if I'm right, you make money. So that's how I'm playing it.
Dennis, you get those. We get this question quite frequently. You get those imbalances through your platform, correct? And
yeah, mine's on Ready, but IB has them. This is available to the retail trader now. A lot of different platforms have the opening imbalances. Call your broker, ask for the information. This is valuable information. It gives you a feel for where the stock, especially in markets like this. Everybody's looking for an edge, for a tell. Where are we going to open? What's happening here? What's the news flow? Right now, there's a lot of buys out there. So that makes me think that, we might substantially open higher here. I mean, they're impressive buys this morning. So I'm just giving you the information. That's all. I try to educate. We're talking to investors for the first half. I'm trying to give the day traders, some information here as well. There's a lot of good traders out there. Just right. My opinion. I mean, the thing that would change is if, all these flip to sell all of a sudden, and they can do that. If they get paired off, then obviously we're not going to open higher. So, but right now, if they don't pair off, if they don't all flip to sell, we're probably going to open higher.
I want to go back
higher than we're at now. You're not saying like unchanged on the day or anything like that.
Well, unchanged is only up 8 points. Okay. I think we could rally. So if you want to be at a ballpark at, I think we open up 20, 30 handles from where we are right now with these imbalances. With these imbalances hold, we'll open up 20, 30 handles. I don't know if the imbalances are going to hold though.
Yeah.
So that's what I'm saying.
So you're saying SPY at what, 245?
Yeah, that could be a ballpark, 245. That's where these imbalances are indicating to me right now. Again, this information is constantly moving.
Yeah, it's going
to change, all of a sudden, a big institution comes in and sells $1 trillion worth of stock, but sells $1 billion worth of stock. Well, that changes everything.
Are you saying the Fed's going to come in and sell this morning? Is that what you just said?
Yeah, the Fed's trying to unload the stocks they were buying yesterday.
Is that what you said?
The Fed's got to unload. We were buying. We've got to unload now. The Fed's the biggest day trader out there.
Yeah, I can see Mnuchin in there, when the spoos get to a low or something. All right, guys, let's get it off the limit here. No. That doesn't happen.
All right, I want to get to some tickers from the chat. These are have been on my list for a couple of days. Somebody asked us about Cisco. They have the WebEx platform that is very similar to Zoom. Haven't heard a lot of chatter about WebEx of late, but it's owned by Cisco, and stocks held up okay actually.
Really well.
S&P's rallying again on the triple D battle
It's
cry.
not on the triple. It's the people that are finally reading the imbalances. They're starting like, oh, we're getting close to the open. These imbalances aren't changing. There's a minute, there's probably 1,000 traders looking at the same information I am. Eventually, as you get closer, they're going to say, oh, we better rally a little bit here. So it's not what I'm saying on the show. It's just 1,000. There's probably a couple thousand traders looking at the same information.
That might be one of your best calls you ever. You made a lot of great calls on the show.
We're up 10 handles since I just talked about this.
Yep.
I think we open 245 right now if these imbalances hold. I'm not. It's just my opinion. But
opinion, but it also your opinion's based on the information. The information can change, right?
I'm just doing arbitrage, really. I'm looking at the stocks trading too high relative to where the index is. It's ETF arbitrage. That's all it is. It's ballparked, but it's a little bit arbitrage.
I'm not sure if you ever do bond ETF arbitrage, but you probably can't now that the Fed is in there buying. So just
I don't know anything about
Cisco's trading. It got off the mat a little bit. 38.68 was your high from yesterday, trading down 15 cents. I see another high right here at 38.47. Where was our close at in Cisco? Our close was at, come on, computer, 38.60. Yeah, so you get above, you hold 38.5 here. I see some potential upside. Next target would be 39.32 for the Cisco kid.
All right, 4 minutes left in this show. Let me go back to the list here that I had written down from a couple. Oh, someone had mentioned, here's one we haven't looked at, Berkshire Hathaway. I haven't even looked at the chart, so I don't know what it says.
Big buy and balance in Berkshire is 171,000 shares to buy. Again, this just moves with the overall market. The chart's virtually identical to the market. So he owns so many stocks. He is the market. It's trading with the market.
Closed near the high of the session. Trading above yesterday's high at 179.14. Next target for that one, if the rally continues, 181.39. That was your high on March 18th. Support at the close. If we go into reverse, minor support, 178.20. That was your close from yesterday, and that was your highest close over the 1, 2, 3, 4 last 5 sessions. Your next closing price, your next higher up closing price is 187.60. Closed right near the high of the day on that day. That was last Thursday with a 187.81 high.
All right, about 2 minutes left in the show today, guys. Any sort of final thoughts? I mean, Dennis just kind of gave his final thoughts here as he's buying stocks for now, as the imbalances indicate.
I'm mainly buying SPY because I think SPY is too low.
Okay.
Yeah. Let's see if we get green here. I mean, I think what would be great for this market is to your closing price. And that was kind of like a juicy closing price, Dennis, because they jacked it in the last 15 minutes and they when the stocks were still trading, but they really juiced the SPUs. So 23.48, that's going to be my key number on the upside here. That was your close. Your after hours close too. Your 5 p.m. close is something I like to note. That was 24.42. And mid-range on the session comes in exactly at that area too. So we get up 24.40, hold 24.40. Then, I'm not going to poo-poo this market, and perhaps we'll go up and challenge the high, pre-market high, 24.99. That was your pre-market high was 24.98, and your last Friday high, believe it or not, was 24.99. So if we really get juice into the upside, there's another target. And if you believe in 9-day average trading ranges and you believe the low of the day is in at 23.86, upside target's 25.81. I just don't see that happening today, but let's hope I'm wrong.
Nice move in Tesla yesterday. Didn't see that. Holy moly, we're up above 500 now. So this one moves, but that's quite the chart there. I don't know what you do about Tesla, but wow, big move there.
Huge moves here. I mean, now it's like you're buying it here now. It was 350 4 days ago. Now you're going to buy it at 550 again. I think you're doing it backwards if you're doing it that way. Who knows?
I mean, I like to. I mean, not necessarily going up, not necessarily going down. I like to see us calm down. You know, and I think that would be, the best thing to, for the market with just, I mean, 195 9-day average trading range. Yeah, it's great for intraday trading and stuff, but you need the market to stabilize, and we'll see. We'll see if that can happen. Let's hope we get some good news on the vaccine front or treatment front, or at least things slowing down with the virus.
All right, that'll be it for our show. I want to thank our guest, Michael Hewson, and thank everyone who joined us in our chat rooms, both on YouTube and on premarket.benzinga.com. Joel and I will be on at 3:40 until the close. The plan for now is that we'll be joined by Luke Jacoby. He is Benzinga's head of everything, I guess. He's our head of revenue. He's also a trader in his spare time. So the plan is for Luke to join us at 3:40 till the close today. You can always catch the replay of this show on YouTube or catch our podcast. Please remember, all the information from our show is meant to be used as informational purposes and not for investing or trading advice. Everyone have a great rest of your day. Be safe. We'll be back with you at the close and then again tomorrow.